Hi, everybody. Welcome back to another edition of BCTV. I'm your host, Kyle Ellicott, and we've got a ton to talk about early stage and seed investments. A lot happening continually in this space, especially after a wild 2020. We saw a lot of new companies get started, and even more so here in the first quarter of 2021. And well, they got to get funded and they got to get funded at the early stage. So we're starting to see fundraisings coming out day after day, as we just talked about on blockchain and crypto today, earlier this morning, at the 1, 2, 3, 5, 7, $10 million mark around those early stage companies. We're going to talk a little bit more about what that means and where some of this activity is happening around the world as well, and some of those early stage or seed based trends that you need to know as investors and also be aware of as entrepreneurs as well. If you'd like to be on a show like today, make sure you first click subscribe and then also reach out to the team and or myself. We'll find that right spot for you. Big thank you to the LATOKEN team and to Maria for making today's episode of VCTV possible. Let's go ahead and introduce our guests for today. Hi, everybody. Welcome. Jason, why don't you kick us off with a little intro and background?
Great. Well, thank you, Kyle and LATOKEN team, for having me back. It's great to be here. I've spent the last 20 years working in the entrepreneurial community in the Chicagoland as well as the Midwest region of the U.S., and been very active supporting entrepreneurs, whether it's on the front lines, building programs to boost up the ecosystem or connecting entrepreneurs to the right resources. So recently I launched Propellant Ventures, which is filling the funding gap in the Midwest here. We are a seed stage fund focused on B2B industries such as healthcare, future work, fintech, and edtech. And we come in as one of the first professional investors in a round. We could lead the round or professionalize the round, but we feel that there's a funding gap at that early stage, so seeds, a pre-seed or early seed. So we're excited about where our market is headed, and there's a lot of great opportunities throughout the Midwest. And I also run the Founder Institute chapter in Chicago. It's in 220 cities around the world. I launched the Chicago chapter 10 years ago, and we're now launching our 14th cohort in a couple months. So that's also gotten me fully immersed into the ecosystem as well. So glad to be back, and thanks for having me.
Wonderful. Thank you for joining as well. Gary, welcome back to the show. A little intro, a little background for everybody, please.
Yeah, I feel like it's family hour. I see people. It's great. Anyhow, it's great to be here. My name is Gary Fowler. I'm a serial entrepreneur and investor. Done 17 companies, been involved in 2 unicorns. I was on the original management team at Click Software, sold to Salesforce for $1.35 billion a little over 2 years ago, and also co-founder of Eva.ai, one of the top AI HR tech companies. I love artificial intelligence and quantum computing. I'm the CEO, co-founder, and president of GST Get Shit Done Venture Studios, a premier AI and quantum venture studios that's curating companies from all over the world, from Africa, from Europe, from Asia, all over the world, the US, and using Silicon Valley support to be able to maximize evaluations and also to develop partnerships and relationships with companies from all over the world. So I appreciate being here. Great to see you.
Wonderful. Thank you as well. Mark, welcome to the show. A little intro, a little background for everybody, please.
Yeah, hi, everybody. I'm Mark Rodriguez. I'm based here in New York City. I'm a general partner at Illuminate Financial. We do late seed and Series A ventures. We're somewhat specialized. We focus on financial services, and in particular, a lot of B2B applications, which find us in places like capital markets and large infrastructure enterprise applications and the like. We typically we've all been operators in the space. I was a consultant at Oliver Wyman, who's sort of preeminent in predictive modeling and strategic consulting and financial services. These tend to be global problems. In other words, if you can frame a problem involving, say, wealth management or movement of securities, it's the same problem you'll find in Asia and in Europe. So as a result, we have offices in New York, London, and Singapore, and these tend to be global businesses, unsurprisingly. We do get involved in earlier staging, find a way to cultivate as part of our network. Part of what we think we bring to the table is a pretty extensive network, both within the industry at places like Barclays and JP Morgan, who are among our investors, in our fund, but also large incumbent fintech firms that are out there like FIS and Bloomberg and others. And I do get involved in earlier stage because that link is important. I've been a mentor at Techstars, both in London and in New York over the years. Y Combinator and the group up in Boston, Mass Challenge, is also a very good program in terms of bringing in some very, very early seed stage businesses. So that's the background from this side.
Wonderful. Thank you, Mark. Raghu, welcome back to the show. A little intro, please.
Hi, I'm Raghu Rao from Princeton, New Jersey. I'm a serial entrepreneur, strategic advisor, and angel investor. I focus on pre-seed and seed stage companies prior to they go for institutional investment, maybe some family office type, and I'm looking for de-risked impact investments in biotech, cybertech, clean tech areas.
Thank you, Raghu. And then also, last but not least, Garrett.
Thanks for having me on. My name is Garrett Van Wagener. I'm the founder of Van Wagener Ventures. I've been doing venture capital investment for 25 years. We really focused on impact investing in clean energy space and smart transportation and smart cities. So that's really where we're focused. We generally do very early stage where we see plenty of upside. It's generally either common stock or round A. We don't like to do alphabet soup. We just think that's a very tough way to go, particularly after a 10 or 12-year bull market. So we focused on making sure that the company has a business that's in place, a product that's in place, and then really in the smart transportation. So we're really talking about the alternative fuel space for vehicles, planes, trains, and automobiles.
Love it. Thank you very much, Garrett. So let's talk a little bit about early stage venture. Right now, early stage venture over the past 2 decades has really changed or evolved, I should say, in what its definition is, whether it goes from in the past was only a couple $1 million in the United States to now 10 to 12 to $15 million in terms of valuation. But outside of the US, it's all over the map. But more importantly, what early stage and seed is talking about is those companies that are starting, that are getting off the ground, that have their MVPs, that are starting to show initial traction and initial growth into the market. And would love to hear from each of you your thoughts as to how early stage and seed venture is really starting to evolve here in 2021. After coming out of last year, we saw a lot of new companies, a lot of industries start to take off that had been promised for 10 plus years, that being AR and VR to blockchain to AI. I know Gary has talked about quantum on here. A lot of these areas have really, even the Internet of Things, IoT, have been always promised that they would be here, and we saw them in a very aggressive fashion now coming into our lives here in 2021. So we'd love to hear your thoughts on just kind of where things are and from each of your respected regions. And then, Mark, I've got a question for you around Techstars in a moment, but first, we'd just love to get your thoughts on the early stage landscape in general. Jason, let's start with you.
Yeah, happy to. So, I focus on the Midwest region, but it does hit other areas of the country. We've had a lot of smaller funds launch over the last several years, the last 5-6 years, but even this last year and even starting in 2021, we've had a lot of smaller funds launch. Many of them are focused on types of verticals, whether it's certain industries or individuals. We've actually had a lot of funds focused on diversity and inclusion for underrepresented founders. So we have some funds that are just focused on making those type of investments, and they're calling it the friends and family round. So some of the hardest money to get for some of those founders to launch their companies or to grow their companies. So they're focused on making that type of investment. So big funds are focused on diversity inclusion, but we also have smaller funds as well launching to do that. So that's been a big push this year. Also, certain industries, like you mentioned, Kyle, are starting to generate some interest. I mean, ed tech actually is something now that people are starting to see some exits. And that's typically been a tough industry to see any type of exits, but it's starting to happen. So there's more money being put into that space right now, especially with remote school and remote employee engagement. So it's corporate and higher education, ed tech, that is getting a lot of attention. And so also just looking at other solutions that investing in solutions that are really being impacted right now, whether it's supply chain, whether it's fintech, virtual events, or future work. There's a lot of people focusing on these type of sectors because of what's happening in the world. So there's a lot of excitement, great opportunities, and a lot of funds are looking at these underserved regions as well. So there's more excitement into the Midwest right now as well.
EdTech's a very interesting one you bring up, and curious to hear everyone else's thoughts before we dive deeper into those. But EdTech, I mean, we're seeing education tech at all levels, right? So with the future of learning in general, whether that be primary to secondary, I mean, the future of education is here in some way, shape, or form, and we're all taking advantage of it. I mean, depending on how you define education, it can spread to things as far-reaching as podcasts, for instance, or streaming audio, things like Clubhouse and others. As well. So there's a lot happening in that space, but I think traditional based ed tech, education tech is what you're referring to, Jason, as well. But that being said, Mark, coming to you, same question, landscape of early stage and seed venture capital, what are you seeing?
Well, there's a lot of activity. I mean, it's I think the tricky thing on these formats is it's not always clear where people's level of prior experience on these things are. So if I say something that's blatantly obvious, I'll apologize in advance. But it's worth revisiting some of the hallmarks of getting one of these businesses going. Is you typically want a great management team and a great business model. And a great business model can be summed up in one word: scale. Everybody wants to understand how you're going to get this thing from a garage or from a series of Zoom calls into a going concern with recurring revenue. I mean, that's part of the prize. And what we find is, I think there's going to continue to be a tremendous number of young firms that are going to get not only early stage funding, where you exhaust family and friends, but then angels that typically come in early to give companies important capital. The other thing that I find in early stages is access to a development partner. It's almost always the case in fintech, at least, that the people tend to be older, the entrepreneurs on B2B. There's somebody that have maybe been in the back office of a large financial institution or an insurance company or a big asset management business. They've got prior experience in a large organization, and they've seen opportunities to do things better, either with analytics or better workflow or a better connectivity to the customer or the user experience. It could be any number of things. And it's much easier. We all know now there's this democratization of data that you can get access to cloud. You can get access to computational power. You can get access to very strong analytics. You can even get non-technical people to code with these low-code, no-code capabilities that allow you to mesh into legacy systems without being a threat as you try to get your business going and try to get close to large users or large targets. So the little guy, if you will, has more of a chance now to play and be taken seriously within a large organization than ever before. I mean, it was always the case previously that you needed to be working for IBM or Hewlett Packard or Digital and days like that, where there was a limited number of the procurement office had a list of pre-approved vendors or consultants that were be allowed in and even given an audience. And those days are long gone. I think now, because there's such an emphasis on the data and content and analytics and user experience, that's so different than focusing on large hardware or on-prem environments. It's very liberating. So I guess to come back to the question then is, I think there's all kinds of people that can play in the game and can get going, usually with a development partner. But by the time they come to me as a late seed Series A investor, we're looking to see that they've evolved the initial opportunity into something that meets the questions of scale, and the management team has demonstrated some ability to create recurring revenue, not just a series of one-off consultancies.
the reoccurring revenue is a very, very core part of that as well. And I see Raghu shaking his head, so I'm going to come to you next, Raghu. What are your thoughts around this industry and what you're seeing?
Sure. I think to add to what Jason and Mark said, I think for the founders, I think sometimes you need the right set of advisors. What I help, I ask companies to do is to first set up advisory boards, and that can be very, very helpful. So you don't repeat mistakes others have done, and also they can help with getting you into the right ecosystem. A lot of it is about not only that who you know, but also who knows you. So I think the advisory board is very, very critical, both technical advisory board as well as business advisory board. I'm specifically looking at certain areas like cybersecurity and privacy, biotech as well as green tech. I think green tech, there is a lot of public sector funding coming in now, which is non-dilutive, which is great. If you can apply for a grant and get something to get started, CBERS or other type of grants, which help you get past that initial funding. Very early, the first funding is usually the toughest, especially if you can get a strategic investor who's done due diligence. Then the others, more financial types, will come in easily. I'm still talking about mostly angel and family office type investors. So I think it's important to also get your IP established, I think it's an exciting time for early stage and startups because I think globally now investors are accessible to global companies, which especially platforms like VCTV, and because everybody has gone virtual. So it's an exciting time. There's a lot of money. I think it is get the best advisors, your plans, and go for it.
Absolutely. I mean, the opportunity to fundraise has never been better in terms of the amount of opportunities and platforms and outlets in general. So you're absolutely right. You can now raise from anybody, anywhere, anytime, thanks to, as you said, platforms like us here at VCTV, but also crowdfunding platforms as well, and just general new technology that has introduced to the market. Garrett, to you, your thoughts on this industry of early stage and where things are going.
Yeah, I think that the three previous guys have said it all. It's, you have to establish your business plan. You have to have people around you that can execute it, and then you have to use, the things that are out there right now. There's so many, like we're talking right now. There's various angels groups out there, and you just have to hit them all and try to get in front of as many people as you can and pitch your product. But you really need to have a serious business plan. A couple of people around you on your in your company that can really help you get to the next stage, and then just to start dialing for dollars. It's the only way you can do it, because if you don't pick up the phone 20 times a day and just keep trying to talk to people who may be interested or have expressed interest using LinkedIn or some of these other platforms, is just a great way to get started. It's very difficult to, there's a lot of companies out there that are looking for money. So, and there's a lot of money out there too. So it's just, if you're going to the grocery store, there's lots of things to buy that you can eat. So you just got to have a shopping list before you go and just go down the aisles. Just pick what you really need to get to the next level.
Thank you, Garrett. Gary, to you, what are you seeing around early stage venture and seed in general from your standpoint? I mean, we talked yesterday about your efforts in Africa. You've talked to us about your efforts throughout the US and in other parts of the world. What are you seeing generally on a global scale around early stage and seed investing?
Yeah, sure. Hey, Kyle, I just want to say most amazing thing happened. I wrote Tim Cook and I got a call back while we were on the show. So sorry about that.
Awesome.
It was kind of amazing. Anyhow, so there's intellectual capacity is evenly spread around the world, but opportunities aren't. And so if we look at there are 1.2 billion people in Africa, and there's incredible minds and incredible talent and incredible entrepreneurs. So we need to look at places, you want to look not where places where everybody else goes, but you want to look where places where, it's like fishing. You want to find the right kind of lake that's stocked. And it may be a little harder to get to it, but the opportunity is a lot bigger, a lot less competition. So what we believe is that if we look at those places, really cultivate them. And again, when you build a startup, having cultural diversity is critically important. So we're looking for those companies that are off the beaten path. The opportunity is to really we use Silicon Valley as a port to the rest of the world. So we're looking for companies primarily in artificial intelligence, semi-supervised, unsupervised AI across multiple vertical markets in the areas like supply chain, insight into the supply chain. We've talked about it numerous times. Why couldn't we get a roll of toilet paper when here we have quantum computers and we're set to go to Mars? At the same time, we couldn't get a roll of toilet paper. So, we need to keep it simple, stupid, and we need to look at solutions that are going to really optimize and make our lives more efficient. So whether it's self-driving cars, whether it's clean tech, remote workforce management, those kind of, we look at technology that really are going to have a dent in the universe, and having the insight and the ability to be able to hear what those trends are from shows like VCTV really has a tremendous amount of input, because it lets you really, sharpen your knife, if you will, to be able to keep it sharp and be on point with those kind of trends and directions that are taking place.
Agreed. And I would love to come around and maybe some more specific industries that you guys are seeing in terms of early stage, and any advice that you have for those looking to raise early stage capital. As investors, I mean, again, I listed off earlier today on blockchain and crypto, our show just prior to this, and was tracking about 5 different companies this morning that announced all in the blockchain and trading space fundraisers of 1.6, 4 million, 5.3 million as well. And so it looks like there is a great deal of activity. If anything, on just in the blockchain space alone, I'm seeing 3 to 5 of these investments per day coming out. So there's a ton of activity. So we'd love to go a level deeper and hear a little bit more as to what industries may be either seeing a lot of activity around fundraising, or that people should be focusing on. Jason, to you, you mentioned ed tech, but anything else that you're seeing, maybe something around fintech and community as well that you focus on with Founder Space?
Yeah, future work and virtual events in particular. If you look at Hopin, who is the owner of StreamYard, that was their big acquisition, I believe 250 million not too long ago. They just made another acquisition. They're looking to consolidate the space, and just in general, virtual event technology or companies are raising lots of money. We invested in one with Propellant Ventures, and there's going to be additional consolidation, but I believe the new normal will be a hybrid approach where people will obviously go back in person, but there'll be also continued remote or virtual engagement with people. So I see that as a continued growth phase, and all that was accelerated because of the pandemic. So I believe that's here to stay. And same thing that ties into remote workforces too, as technologies and other engagement tools to allow employees to engage, but also employees and employers to engage. So again, this was an acceleration. I mean, I think as we know, those in the entrepreneurial community, most teams have been remote for a long time anyways, or had that option, but with larger companies, this is now a normal. And I think employees are going to expect it, is to have that more flexibility. So there's all these tools that are out there to improve all of that. And so I think that's going to continue to grow.
So speaking of the future, and not necessarily future work, but future of fundraising, kind of to switch gears for a second, AngelList yesterday launched a new feature called the Roll-Up, giving founders the ability to have all of their angel investors invest in through this new feature and essentially be one name on the cap table. And this is very similar to what an SPV would be, a special purpose vehicle for those who may not be aware. But what does the future of fundraising look like? I mean, if you're starting a company right now, where do you go to fundraise? Do you go to individuals and angels? Do you go to VC funds, early stage and late? Do you go to these crowdfunding sources? Do you go to traditional crowdfunding like Kickstarter and Indiegogo? What does this all look like? Because to me right now, this seems like the best time to build a company. There's more capital than I think I've seen in any of the cycles previously. There's more ways to do it and more easier ways to do it. So we've talked about the cafe note. There's safe notes, there's safety notes, there's convertible notes. Again, you've got these features on AngelList, you've got syndicates, you've got more opportunities than ever in front of you. What does the future of fundraising look like? Mark, you're giving me a look like I'm crazy painting this picture, so I'm going to start with you. What does the future of fundraising look like? I mean, what have you seen at Techstars? What are you seeing yourself as an angel investor as well?
Yeah, I think look, there's as we know, there's a lot of excess capital right now, and that could create a bubble if we're not careful. The SPACs come to mind right now because they're very aggressive in their pricing. But look, there's a lot of people with discretionary income. They're not enamored with the interest rates they can get from bonds, and the stock market has treated them reasonably well. But there seems to be a lot. If you look at NFTs, I'm sorry, I don't want to sound old-fashioned, but if I look at the pricing on some of these NFTs, it just sounds like there's a lot of people with time and money on their hands. I do think there's plentiful sources of both money from private sources. Family offices are getting more involved in getting earliest stage access, and they want to co-invest in later stages, but they're looking to get involved up front. People can contact the usual friends and family, and then you are right, the crowd sourcing or crowd funding vehicles as well. So I think there's enough. This does seem to be enough capital, assuming that the teams meet some minimum criteria of credibility, some of which we discussed earlier. Then the issue is not so much can they get access to capital. The question becomes is do they know what to do with it? And so it's sort of like it moves quickly on to, okay, it's showtime. You now have enough to be dangerous. You've got, and what does one need to be dangerous? Maybe it's just a few hundred grand, depending on the industry you're in. You can prove your investment thesis or your product thesis with some surety. And look, I mean, I think the accelerators and the incubators that are out there. And the residencies that are created, those are a way to try to further counsel you and give you the kind of access to mentors and access to markets, so that you don't go broke trying to making the same mistakes that many before you have made. I mean, it was mentioned earlier by one of the panelists how important it is to get a cohort group around you or a team around you of different advisors. And I would suggest that maybe money is one of the, I don't want to say easiest one to do, but it's one of the ones that is more solvable, getting access to some initial funds. I would argue the bigger challenge is going to be getting the right kind of advice so that you don't burn up all your money trying to price the thing properly or get to the right buyer. That's where you're going to lose money. Most of the time, people aren't suffering from a lack of ideas. Or even a lack of capital initially. They just run out of time, right? They're trying to do too many things at once. So if it does involve putting yourself through the rigors of a kind of a Shark Tank-like environment that can sometimes exist at these incubators or accelerators, they are going to make you stronger. And so to me, it is as important a step toward developing and maturing as seed funding.
Yeah, and you brought up something around discretionary income, and I did forget to mention as well that we did have the Reg CF movement here in the US go from just over 1 million to now over 5 million, allowing for companies to raise up to $5 million from both accredited and unaccredited investors. So anybody now being able to invest, and also the amount of money that an individual is able to invest has also moved up as well if you're not an accredited investor. So that's another good point. Thank you, Mark, on that as well. Gary, to you, future of fundraising. I mean, you're investing in companies in Africa, some of those who have never met you before. I mean, is this what we look at, and how does that picture really get painted?
Well, with the digital transformation taking place, Kyle, we talked about it, from last year about this time, right? This incredible digital transformation, people sat on their hands for a few months and weren't sure where to go. I remember speaking to SoftBank, and, they were kind of, holding back a bit, but, the world moved forward. This digital transformation is upon us. And, we talk to family offices on a regular basis. you are right. They're going downstream. They're looking at earlier stage companies to invest in. Their families, their family members, younger generations of the family are actually getting involved. And I've met some of them on VCTV actually. So there's a great opportunity, but you got to think differently. It's not, it's a little bit different than it was before, because it's not just about a numbers game. It's about what kind of visibility you have, because as soon as you start to go out to raise money, they look at you online. What's your online presence? They Google your name as soon as you start to talk to them to figure out who you are. So my suggestions to each and every one of those companies is you got to generate some content. You got to have an online presence so that people can understand who you are. You need to have an updated LinkedIn. Wherever information on you is available, you need to make sure that that information is updated and updated on a regular basis, because they're going to use that as one of the gates to be able to get in the door. So my suggestion is to do that. You've got to write. We write a lot. I've written 120 some articles in the last year. Just write, because people do read them, and you need to be looked at in your particular area as an expert.
Well, you never know who's listening or who's who's reading those types of things as well, and how they can be leveraged.
It's unbelievable, Kyle. I've had I had one of the top family offices in the world. Their representative contacted me and said they were following me for 10 years. And I got a little nervous when they said it, but they said they were looking at my Facebook. It so happens, and maybe they'll be on the, listening on the show, but I mean, it was a great honor in a sense, because one of them was my Facebook friend. I didn't even realize it.
It's funny. It's small. It's a much smaller world than people imagine. Raghu, any thoughts to add on to this point of the future of fundraising, as you're also making a lot of investments on a global scale as well? So we'd love to hear your thoughts.
Yeah, I think two things I've noticed. One is the availability of, like, for instance, funds from India and other places where they've become more professional in terms of coming in on even global early stage investments. The second thing is depending on the type of business model, whether it's B2C or B2B, crowdfunding may not be the right thing for instance, like a biotech company that's planning to go IPO in or a unicorn type company. So I think you have to look at what is it, like something that's going to generate cash flow very soon. I mean, generating cash flow soon and is like more like a recurring SaaS type model. I don't know that. I think you need to get customer traction. That's actually helps you a lot more, and especially on the valuation. So the more traction that you have, whether it's pilots or customers, paying customers, I think that is much more valuable than even raising a lot of money. I think the money part you'll get at much better valuations as well. So, yeah.
Okay, no, go ahead.
One of the other things that I was talking about with India is that there is a company that I'm about to exit where we brought the company from India with a lot of IP in the pharma space, and we raised money here, about 15 million. And now the exit is coming from the US company with Singapore funds. So it's really become global.
Wow. And in terms of cybersecurity and bio, any early stage trends that you're starting to see right now of companies that are fundraising?
Cybersecurity, because of the kind of rampant nature of ransomware, and you saw the SolarWinds. I think there is a really new look at decentralized technologies. There's something called privacy enhancing computation. The idea is you don't kind of do these things like once a quarter or once a year kind of audits and checkups. You have to do it continuously, and you have to protect the data while it is being used. So Gary and I are now collaborating on a company called SplitByte, which has a decentralized platform. It is kind of like a vaccine where the system breach does not translate into a data breach. You have to go to multiple locations and breach them, otherwise you don't have any data. So those kind of technologies. There's another company I'm advising called Squirrel Compliancy, which kind of takes down the monitoring and vulnerability assessment on a continuous model. They can do it in a few minutes, what used to take like lots of labor and kind of very, very slow process of getting even the lead companies like Tenable and all take like quarterly audits or annual audits. This is bringing it down to every day. In fact, in a few hours, we can detect things that as they happen, which is very important because the hackers are moving very fast, right? And if you have a vulnerability to detect before you know of it, they might have exploited it so much. It happened to me on LinkedIn one time. I detected that something was going wrong, and before I could shut it off, they already reached out to about half my LinkedIn contacts. So you have to be really, really nimble, prevent, and if you do detect, you have to be able to respond very fast. It's not, we can't anymore wait for audits to catch things.
Wow. You're absolutely right. I'm seeing shaking heads all around. And gentlemen, I want to come around for closing thoughts. Any advice that you have for those looking to raise, again, early stage capital, their first round, maybe their second round in general, and just advice for the market overall? And then, of course, where can you be found online? Let's actually start with Garrett. Closing thoughts, and where can you be found online for those looking to continue the conversation with you?
The best way to get me is just my LinkedIn account. I think Gary just hit it on the nose. You really have to get out there and use all the available social media to really establish yourself, because as I said earlier, you need an established product and a business plan, so people, if they are interested and you get in contact with them, they get back to you. And it's like, well, what are you doing? What does your business plan look like? How many people do you have? What's your technology? And you don't want to give away your IP, obviously, but you have to be able to tell them what you're doing, how you're doing it, and where it's going to go. And that's the best advice I can give. We're just focused on a very small area of smart transportation, smart cities. So really, in those areas, we're just seeing a fantastic amount of new companies going up, because the transportation from internal combustion engines to electric or hydrogen is just going to happen very quickly over the next 10 years around the world.
Absolutely. Thank you, Garrett. Gary, to you, closing thoughts, where can you be found online?
This is a great opportunity. Get out there, get the visibility, as Garrett had said. Make sure you've got an online presence. The other thing is, we deal with companies from around the world, and sometimes the mentalities are a bit different. They say, I hope, maybe, I think I might be able to do it. You got to think positive, because investors aren't going to invest in somebody that thinks they can do something. They want to be assured that you can get the job done. So focus, persistence, tenacity. Being able to speak publicly is also something that you got to practice. Steve Jobs would take 6 weeks before he would get on the Moscone Center stage and practice his speeches. Practice. It's really important for you. You can reach me on LinkedIn. You can reach me on Twitter. Love to hear from you, and go out there and get them and get shit done.
Thank you. Jason.
Yeah, one thing I want to mention about the future fundraising that I didn't mention before is there is a movement to lower the accreditation, the accredited investor status, to allow more people to invest. So they've opened it, the SEC has opened it up a little bit, where if you have a FINRA license or any type of financial license, you're considered an accredited investor. But there's a bigger movement to get those individuals that are not at that income level or net worth level to be able to start investing. And that's being more inclusive and opening up investment opportunities. If you think about it, you don't have to have a certain standard to invest in the public markets as an individual, but you do for a private individual. So I believe that will be changed. It may be this year, if not next year, probably, but there is a movement around that. So just something to be aware of, that will open up the floodgates for more investors, assuming that passes. But in terms of just, I think being very visible, like Gary said, for entrepreneurs, go to different events, meet people virtually, meet people in person. Just get yourself out there and put your information on these platforms. Don't be afraid to talk about your company, to share your information. Be open to it, because you never know where you're going to meet people. Participate in platforms like Lunch Club or Clubhouse to meet people. There's a lot of great tools out there. And for those that want to reach me later, you can find me on LinkedIn, of course. Also, my email is jason@propellant.vc. And thank you again for having me.
Thank you, Jason. Mark.
Yeah, I think those are all great comments. I think it's a series of iterations, right? And I think the great thing about these platforms that were just mentioned is that you can learn from them. And I think that so many investors that I know, and when I was in private equity, it was equally true as now being in the venture business. People, before they invest in you, will always ask themselves, can we work with this team? I mean, there's some people that just put their money in and then they walk away, and it's kind of passive investment. But there's just as many out there that are more active. And they ask the tough questions before they invest, and then once they invest, they stay with you. So I think you've got to be willing to both, on the one hand, be stubborn and headstrong and have conviction for your idea and your company. But then you have to balance that with the ability to be open-minded and learn and adapt as you go along, because you're going to get a lot of rejection, right? By definition, you're going to get a lot of people saying no, and that's where you really have to have resiliency of the first order. And the other thing too is don't go cheap. You have to give yourself enough runway, right? The majority of firms run out of money, as mentioned before, and you know the old saying, right? More entrepreneurs die of indigestion than starvation. So you can be unfocused. So there's this issue of having enough runway that you can get what you need done. You can build relationships with potential buyers. You can have development partners, and you can advance things. So you want to make sure you have enough cash and enough time on the one hand, but on the other hand, you've got to stay focused and not be have your eyes so wide that you're grabbing everything at the lunch counter. Some steely-eyed focus on, regardless of what business problem you're solving, is pretty important.
Wonderful. And last but not least, Raghu, close us out.
Thanks. I think the key thing is to build a extended team that is very capable. You need to have the advisory board, and you need to have members in your team that can, have different profiles. Diversity has also the ability to, close. For instance, a lot of teams lack that. So I think you have to really leverage the entire team to make it work. People can find me on LinkedIn at Raghu S. Rao. Happy to help in any way. Thank you.
Wonderful. Thank you all very much. And to our audience, thank you so much for tuning in, for all the great questions and comments as well. If you like today's episode, please give us a share. Also, check out the archive on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family. And make sure to reach out to all of today's speakers to connect with them, and also to follow up and have continued conversations if you're looking to fundraise or building within their respected areas of focus. Make sure you add context, where you heard them, where you met them, and what you would like to continue the conversation about. With that, we're going to take a short little break here on VCTV and be back in just a few minutes to talk about what else is happening around the world of venture capital, as, again, here it is midweek, end of the first quarter of 2021, and we have a lot more to discuss. With that, I'm your host, Kyle Ellicott. You can find me everywhere at Kyle Ellicott on all social media platforms, as our investors mentioned as well. Big thank you to the LATOKEN team and to Maria for making today's episode possible. We'll see you here in just a little bit. Thanks, everybody. Have a great day.
Bye-bye.
Bye.